Department store chain Macy's releasing its Q3 earnings this morning. The shares did come under pressure. One of the problems the company is wrestling with is this $154 million US or so in delivery expenses that were hidden by an employee. We're joined now by Oliver Chen, Managing Director at TD Cowen, also an adjunct professor in retail at Columbia Business School. Oliver, it's great to see you. Thanks very much.
Sure. Happy holidays, Andrew. Great being here.
Same to you. Macy's, just comment on the latest quarter, if you would, and this odd story. Apparently, it wasn't theft. It was the employee hid expenses.
Yeah, unfortunately, an employee did hide expenses. That being said, it was isolated to one employee, and it was in the past, and it was a non-cash flow statement item. So that happened, and the company going forward has added extra controls. So we're looking forward to that happening. And this was a relatively small error in the context of all delivery expenses. It's about 3 to 4% of total. So some adjustments had to be made. Zooming out, fundamentally, the U.S. consumer is definitely at a crossroads. The shopper here in the U.S. and globally is looking for promotions and value. That negatively impacted Macy's earnings in terms of customers looking for deals and promotions and merchandise margins. And comp store sales continue to be negative. That's something we're watching in terms of our hold rating on Macy's.
Yeah, Wall Street's cool on this name. Apparently, there are 9 holds and only 4 buys. Are they really going into a headwind here? Well, the golden age of department stores is over. I mean, that's pretty clear.
Yeah, things are changing and less can be more, meaning the future of stores, we would all agree they need more service. They need less stuff, but better stuff. What they're doing is they're doing what they call the first 50 stores, and they're running tests on these new stores to really offer better service, better product, better navigation. Those are comping positive. So hopefully they can take those practices to the whole chain next year. It's to be determined. But Macy's has tons of awareness and it has data. So there's potential here, but it's something we're watching. Big problem, getting younger customers in store, getting consistent traffic, and having unique product as well. That's so important to the consumer.
They own Bloomingdale's. Some activist investors have suggested they sell that or spin it off. Can you remind us, is Bloomingdale's a more upmarket brand than core Macy's?
Yeah, think of Bloomingdale's as more, it's an iconic New York store, a little bit more like Nordstrom or even more elevated in terms of being a fashion authority. So Bloomingdale's has been doing quite well, and they have new management there who came from Selfridges as well. And the CEO of Macy's at large came from Bloomingdale's. And Bloomingdale's really stands for differentiated product and fashion. It's been working. They have another division called Bluemercury, which is a little bit more like Ulta in terms of all beauty. Those are pockets of really nice strength. So it's something we're watching. The company does like these entities united as a banner, given that there's some good learnings from Bloomingdale's. But you could argue perhaps they could be monetized independently as well.
While you're with us, I wonder, could you give us an outlook for Canada Goose? Of course, a company that's often seen as very dependent on the China business. Is it a buy right now?
We're on the sidelines at a hold. However, we're quite excited about a new creative director who will continue to add a lot of energy to Canada Goose and the brand. The big need here is for Canada Goose to sell lifestyle product beyond just the parka. China's been tough, but better for Canada Goose than others. That's a market with lots of cross currents, meaning the housing market and consumer confidence and traffic's been difficult in China. But the Canada Goose brand is resilient, iconic, stands for quality. Outerwear is a great category. We are cautiously optimistic, but we're looking forward to a lot of these good creative and merchandising changes, which hopefully will smooth out earnings more and drive year-round sales as well.
Yeah, I'm not sure if we looked at Canada Goose shares there. Oh, we did. Sorry, they're down about 15% in the past year. Could we just switch? We're switching gears rapidly here on you, and it's great having you on the show. Walmart, you have a buy there. You see upside. Why is that?
Yeah, this is our top idea for 2024. And we're excited about Walmart because the main story for retail is to offer consumers value and everyday low prices. Walmart really excels at that. Also, as we think, Andrew, about this stretch consumer who's looking for deals and really spending on their needs, Walmart is a leading grocer, and that part of the business adds a lot of stability. At the same time, Walmart has an advanced technology offering, specifically digital advertising, as well as the marketplace model. Those are growth drivers too. So you get a defense business, you get an offense business, and you get robust cash flow. As we think about the environment ahead, there's a lot of uncertainty, tariffs, supply chain, the consumer, and Walmart is in a good position because it has so much scale, because it has so much ability to leverage its relationships with suppliers. Technology and scale will also continue to be a big theme. Artificial intelligence, also how shoppers shop with large language models and navigation and assistance and expecting delivery and curbside pickup. These will be very expensive endeavors, and Walmart is excelling at delivering in this way as well.